I had the good fortune of having to market the concept of thinking long-term after the medium-term budget framework was launched by government. And I assembled about a dozen CEOs of companies on the stock exchange. And in that discussion, it was to try and get them to think long-term about the assets that they are managing, to think 10, 20 years. I had a very interesting response. And the response was, Elias, don't waste our time. I asked why. And they said, each one of us here has a contract of 5 to 7 years. We don't think beyond that. The next CEO will worry about the next term. Now, that was extremely depressing, because what it meant was that we are short-termist in our thinking. The way in which we structure our incentives tends to cement this short-termism. How many of us in this house have an incentive structure which is based on a 3 to 5 year basis, not on an annual basis? What it basically means is that all of us in this house are thinking the next 12 months. If I can maximize my returns in the next 12 months, I don't care what happens thereafter. That needs to change. And I thought that over time, and with engagements that have taken place, there would have been a significant change. Last year, we went to the UN Global Compact private sector network in New York, where there were over 1,000 participants from across the world, leaders of companies. And the question was asked, who is ready and who is already implementing the UNGC principles? Only 30% of the room raised their hands. And for me, that was an indictment on us. We haven't moved sufficiently. And that means whatever we're working on will not be optimal inheritances for future generations. Now, in order for us to cement this and to get a change of behavior, every entity that does work with the PIC needs to account to us on an ESG basis. If you cannot, we put you on a watch. And unlike your traditional asset manager, we cannot vote with our feet. If a company is unable to deliver against a particular benchmark, we can't pool our resources. Instead, what we do, we have the tendency of putting more resources in there and try and influence change from within. Some say it's a bad approach, others say it's a good approach. It's yet to be tested, but that's what we do for now. That takes me to the fourth pillar, which pillar is about dealing with the unemployment situation that we're faced with. And that is investing in the development and the growth of small and medium enterprises. This is not about just creating these institutions or creating these entities. It's about building entrepreneurship on the ground, building business people and business leaders that can innovate this country to a higher level of activity. An illustration here is the financial crisis. We're in this crisis today because of the biggest economy in the world, the most educated economy in the world, the US. If you look at the statistics, what the statistics shows is that the US is now out of the crisis. We're still sitting in there. What distinguishes the US from a South Africa or from any other economy? Its ability to innovate itself into trouble and innovate itself out of trouble. That is the kind of entrepreneur we want in South Africa. If you read the National Development Plan today, I know that it's difficult to read 400 pages, but if you skim through that plan, you will see that one of the key areas that have been identified is dealing with entrepreneurship, is dealing with education and skills. Every single problem that is identified in the NDP has its solution in those variables. And that means, as institutions like GIBS, we need to make sure that we invest sufficiently to produce the right type of entrepreneur, or even the right kind of employee, an employee that is solutions-driven, rather than an employee that waits for the manager to tell them what to do. That is a new South Africa that we're looking for. And going forward, thinking about the future of this country, it cannot be anything else but making sure that we embrace and implement the principles of the National Development Plan.